First of all, we had the Dow yesterday hitting 12,000 for the first time since June 2008. Didn't close at those levels. Is this significant at all?
I think so. I read recently that this is the third year of a 4-year presidential term. And since 1947, the third year has always been a positive year for the Dow Jones. So if history repeats itself, 12,000 is a good level and should continue going from there.
Do you think we'll see other markets rallying on the back of that?
Yes, the US is the biggest stock market and it affects all other stock markets. So if you have positive sentiment in the US, it will definitely filter through into our market.
At the same time, we're getting very mixed numbers coming out of the United States. We've had some positive economic data recently. Today, though, durable goods coming in a little bit disappointing, falling by 2.5% in December. Jobless numbers also not looking great. And company reports, well, most of them are good. There have been a few shockers in there as well.
They have. And on the durable goods number, there's some concern about how exactly they calculated it, because they specifically mention aircraft sales in there. And Boeing also independently said that they did have a few aircraft orders in December, which don't show up in those numbers. So hopefully the case is better, although it's spotty, that it's going better than what a lot of people are thinking in the US.
We'll take a look at some of the news we've had out today. Kumba Iron Ore, really one of the big stories. It was in Business Day this morning. They put out a statement this afternoon saying they are going to be taking this to court. And this is a very messy saga that's been playing on for more than a year now. Yes,
and Kumba has drawn a line in the sand now. They've said they will not let this go. They will continue fighting the DMR. And it looks like they are intent in getting the mineral license for Sishen Iron Ore Company. And it's going to be interesting to see how this ends up, because it would seem like the DMR are on Imperial Crown Trading side. So very messy, and it would be interesting to see how that ends up.
We had Kumba Iron Ore today trading over 2% higher, trading around 467 Rand. So shareholders really not perturbed by this, but it's not a stake that Kumba owned anyway, because it belonged to ArcelorMittal before, didn't it?
Yes, look, I think the risk is that if they should, if ICT should, from their prospecting right, get a mining right, that can really put a spanner in the works of Sishen Iron Ore Company. So in terms of Kumba Iron Ore, you didn't see a big movement. In terms of Arcelor, I think you have a case now where if things go as they plan with ICT and they do get a mining license, Arcelor will take over Imperial Crown Trading, and that could be a huge leap for the Arcelor share price, seeing that they will get their iron ore at a very low cost then going forward. And we had ArcelorMittal last year falling from well over 100 Rand down to the mid-80s, today trading at 86 Rand 71. And that was really when it lost that right, so it would push that share back up above 100 Rand perhaps. Definitely. If ICT should get the mineral mining right, then you can easily see Arcelor above 100 Rand again.
JD Group out with the sales and debtors update for the 4 months to mid-January, and it looks pretty good. Even though they had product deflation in the cash sales division, they still managed to grow sales there 6.1%, and overall growing sales quite strongly across all divisions.
Yes, the standout there being the furniture division, sales of more than 20%. The loan book seems to be in good health. The bad debt charge came down, and the other loan costs came down as well. So concerning about the cash business, which is Incredible Connection and Hi-Fi Corporation, those were below expectations. And then Abra, which is in Poland, also below expectations, and you had the zloty also weakening against the rand. So the focus will be on furniture and the health of the loan book.
Well, I think here we should bring in Anthony Clark. He's a small caps analyst at Vunani Securities, and I know it's not one of the companies we were going to discuss today, but I'd like your view perhaps on the retailers, because we've seen trading updates out from quite a lot of them, most of the clothing retailers, some of the food retailers, some of the furniture retailers also coming through with numbers now. Do you look at the retail sector at all?
Yeah, we do cover the retail sector, and you know, whilst many of the stocks are now, let's say, the larger mid caps, I still keep an eye on them for historical reasons. You know, in the past we've had very good results from Mr. Price, trading updates from Fashini, Truworths. You mentioned JD Group today. I think what we are seeing in the economy beginning to turn, that people are becoming a little bit more confident, but looking to spend a little bit more. And I think the strong rand and the product deflation is assisting the consumer in buying goods currently.
Anything in the small cap space and among the retailers that you would be advising clients to take a look at?
Sadly, many of the smaller retailers were taken out many years ago. One of my favourites, House of Busby, was taken out many years ago. And now most of the retailers are sadly a little bit too large for me to cover.
I suppose a little bit too expensive still, Jean Pierre.
Yes, look, the retailers have come down. If you look at ShopRite trading in the lower 90s again, Spar as well, There have been some corrections in those share prices, and I still think that you need to be very careful. Some of them still have some good upside, but as a whole group, the retail sector looks expensive.
Well, we had the Competition Commission coming out with a statement today really clearing them of any collusion in the industry, and I think we had news earlier this month that would be the case for them. It doesn't seem that there was much concern among investors that they would be put down for collusion because the share prices weren't reflecting anything.
Yes, turned out to be a non-event. The only area of concern is exclusivity in terms of leases. So they did say that they will put pressure on the retailers and the property companies to try and move away from that practice. So you could see competing retailers now in the same shopping centres, which will be good for competition and could increase competition.
You mean as anchor tenants, because you don't often see perhaps a ShopRite and a Pick n Pay in the same centre?
That's correct, and going forward that could be the case. And that could increase competition and lower prices to the consumer.
Okay, moving on. Ferrochrome producer Merafe trading statement for the year to December. Headline earnings per share expected to be 10 to 12 cents, and that's compared with a loss of 6 cents the previous year. But I think the previous year was pretty bleak for them, and you had very low ferrochrome prices, didn't you?
Yes, a good turnaround, but once again, the biggest input price in ferrochrome is electricity. And while we had good electricity supply in the past year, I think once again the concern is that in the next year, we might again be quite tight in our electricity supply. If there are electricity cuts, brownouts and load shedding, then someone like Merafe is going to be a really bad position, seeing that that's their major input cost.
Anthony, looking at the small cap space, anything in the mining space there that you like?
Yeah, I've mentioned in the past that Petmin is a company that I'm quite fond of. It's involved in coal, it's got some iron ore operations and in silica sands. And they recently announced a small deal to look at iron ore in Liberia. They paid a very small dollar cost to get a prospecting operation. The company's got a fair bit of cash stashed away in its balance sheet, I think about 300 million rand. And given the fact that iron ore and coal is the hot topics internationally, I think Petmin as a smaller company is one that's worth having a look at.
A bit risky though, perhaps, with that Liberian venture.
Well, everything's risky in the small cap mining space, but you pay your money and you get your rewards.
Well, going back to the large caps, capital shopping centres, extraordinary general meeting today, Jean Pierre, and it's actually the end of a whole saga playing out for capital shopping centres. Shareholders have given it the go-ahead to go and buy the Trafford Shopping Centre, and one of the shareholders, Simon Property Group in the United States, was dead set against this.
Yes, and Capital Shopping Centres very quickly arranged an analyst site visit to the Trafford Centre to try and persuade shareholders to vote for that transaction. In the end, they got very strong support for that. So you have Peel now being a big shareholder, bigger than Simon Property Group now, and that could frustrate Simon Property Group if they ever had intentions later on of trying to take over Capital Shopping Centres.
And Simon's shareholding, of course, diluted with the new shares that are going to Peel at the same time.
Exactly. So Peel comes in, and that makes it more difficult for Simon, if they wanted to do corporate action, to do anything like that. And it seems like the Capital Shopping Centre management and executives are very comfortable with Peel as an anchor shareholder now.
No pun intended, but is Capital Shopping Centres appealing at all to South African investors?
Yes, remember it's a fragment of the old Liberty International, so they have a very good shopping centre portfolio in the UK, and I think with the rand where it is at the moment quite strong, around 10 versus the pound, it's a good opportunity for SA investors to get international exposure.
Anthony, we're going to bring you in now with some of the small caps we're chatting about today. Let's start with Ellie's, because they had results out last week, I think, and the results to me looked pretty good, though the share price on the day took a bit of a battering. Why was that?
Whilst the underlying results, they showed a modest rise in revenue of about 11% and about a 20% rise in profit before tax. If you unpack that, benefits of lower interest rates helped them. They raised money via a rights issue, which again assisted them. But all in all, people tend to focus on Ellie's. There's too much noise in the background. I mentioned a note earlier in the week that the core operations of Ellie's, which make like sockets and plugs and install your DSTV, is over 80% of revenue and profits. But people tend to focus on the smaller bits, which they always sort of rah-rah about. So Ellie's has moved up from 170 in December to the current level of about £2.15, which is not a bad gain in the last month and a half. But all in all, I think the results indicate that they could do better. The Megatron operation, which is involved in heavy industrial power generation and substations, had a particularly poor period because the underlying municipalities in this country simply weren't spending. That came back to hit the company, and all in all, if that starts to recover in the second half, Ellie's could do better. Perhaps the market didn't quite like the Megatron operations.
How about prospects for Ellie's? They were having the switch to digital TV coming through. They have a strong relationship with Altec. So I should imagine quite a good pipeline of work ahead for it.
Yes, I think we all know that the signal will be changed by 2015, and by 2012 there should be a dual signal coming through analog and digital. Ellie's estimates for some 9 million households in this country at some point will need their aerials changed. If you're a DSTV subscriber, you can pick it up on your satellite. But many of the people in the rural areas and in the townships just have a normal aerial, and they will need to be changed to get TV signals. So I think going forward, that will be a nice area of business for them. They expect going forward that could be a material profit generation for them on the next 5 to 7 years.
B&W Instrumentation trading at around 116 cents. Executive Director Ken Nell stepped down from his board position last week. Is this a concern to you because he'd been in that position for quite a while? No,
not really. He's reached retirement age at 65. I think what concerns me is he's a large shareholder. He owns 6% of the company. Chairman John Barrow, who's also 65, owns about 14%. 60% of the company is owned by founding shareholders who are all reaching retirement age. The company's been in the doldrums for the last 3 years as the economy has gone in the downturn, and not many people are looking to build new smelters, etc., etc. So the workload's been fairly stagnant, and the profits have been flat for the last 3 years. So I'm just, let's say, surmising that if people are stepping down and they're looking to take some cash off the table, given they're nearing retirement age, perhaps people are looking to buy a skills-rich business on the cheap, because this company in the good times can do extremely well.
Either of those companies take your fancy, Jean Pierre?
Yes, I like Ellie's. The one concern I do have is in their deal with Altec UEC, it could be a big drain on their working capital, seeing they'll be holding those decoders as stock. And that's partially why they did the rights offer in anticipation of that. But if the deal does come through between them and, excuse me, and Altec, it will definitely increase their sales because a lot of people do need those decoders.